Bitcoin spot ETF applications for January have finally been approved and they're now officially available for trading. In today's video, we're going to talk about the market's reaction to this news as well as the most likely price action moving forward. By the way, if you're new here, hi, my name is Jess, and as the channel name suggests, it's all about crypto, trading, and technical analysis. So if you're all about that or you'd love to learn, hit the like button and subscribe to the channel. For those of you who missed it, it's been an absolute hailstorm of media and hype in the last week of crypto. On the 9th of January, the SEC was hacked, causing them to release fake approval news of the Bitcoin spot ETFs, and the market rallied to $48,000. Gary Gensler then tweeted 20 minutes later that the SEC had been hacked and the news was fake, and so the market absolutely dumped to 44,300. The next day we finally had the real approval news, and 11 spot ETFs were made available for trading later that day / early the next day. The market has slowly rallied to $49,000 since, but then plummeted by 15% over the last 2 days. Let's talk about why this move happened and whether or not we've finally seen the bottom. So naturally, when we have news in the market that people perceive as positive, we're going to have a rally, right? People are excited, people buy, and so that's exactly what happened. We had a rally to $49,000. It was a little bit slow, slower than, for example, when the SEC released the fake ETF approval news, but I think it was because they kind of learned from their mistake and they didn't release it on X or anything like that. It was literally just they put it on their website and the news slowly trickled to the media, like news outlets found out later and later throughout the day. And then we finally saw this big move when those ETFs became available for trading. They were listed on exchanges, people saw that, and it was like real confirmation, you know what I mean? Because no one I think official really posted about it until like they were actually made available for trading. So there we go. We saw that rally, $49,000, and then we had this crash, and this was huge, 15%, and now we're sitting at 42,600, 700, but we dropped all the way to 41,500, and so that's a huge move. It was like, 15.21%. So let's talk about why this happened. So first of all, I think the most understandable reason is because there was a lot of accumulation in the market even prior to the news, especially because the way this ETF news kind of spread, there was so much rumor mongering, there was so much speculation, and a lot of it was positive. Everyone was excited about it. Like I said in my last video, I literally couldn't go anywhere without seeing ETF news on my phone, on my computer. Like everyone was talking about it, everyone in my life was talking about it. So it was a really, really big thing, and people would have bought, if they were going to be positive about it and they were really sure that it was going to be approved, which a lot of people were, they would have bought ages ago, all the way back when, it started to become a really big thing. And I said in my last video, I do think this was around October, and what we saw was we had a huge deviation, I guess, from our major macro trend line. So this is our accumulation trend line. So this is like end of the bull market, people are starting to buy Bitcoin again, kind of thing. That's that trend line there. That's that macro trend line. In October, we see this huge increase in the steepness of the trend line, and so that's more than, I guess, normal amounts of accumulation. More people are buying than we would expect, and the steepness of this is almost akin to a bull market. If we have a look at here, almost, right? Not exactly, but yeah, so it's a lot steeper. And so what that told me was that we were accumulating more than we normally would. That was kind of natural for an accumulation phase in the cycle. So I think this was a result of two things. First of all, I think institutional buying. I think those institutions that were most positive or optimistic that they were going to be approved, for example, Grayscale, BlackRock, ARK21, they would have bought their Bitcoin early on. They wouldn't have bought it later on when their application was finally approved. They would have accumulated way back here because this is when it was cheap. And of course, they're not going to tell you when they're going to buy it, because then you would buy at the same time, right? If they're going to buy millions of Bitcoin, they're not going to tell you when they're going to do it. So I think this would have happened here. And I also think that a lot of this was retail buying. So, like I said, all those people that were very certain that this was going to take off. And understandably, they'd like to take their profits at the approval news, because that's when they know they can be certain that the market's going to do this rally, and this is when they can get the most out of their investment, right? And so, it's 80%. It rallied, if they bought all the way in October, it would have rallied 80%, and that would have been a huge amount of profit for them if they had decided to take the trade back then. So yeah, I think that's the first reason. And the second reason is because $48,000 is such a huge level of resistance. And I'll talk about that a little bit more in a second. But basically what that means is we didn't actually have a break over $48,000 here. What we had was a liquidity grab to the top side. And so we had this liquidity grab, and because it wasn't a break, we didn't actually find any support on this 48K level. We broke below it and we crashed all the way down to 41,700. So yeah, those are the reasons why this rally and this crash happened. And so let's talk about whether or not this is the bottom. Okay, so have we seen the bottom? That is the million-dollar question. And so I think on a shorter time frame, I think yes, we will find some temporary relief. And the main reason I think that is, first of all, on this daily chart, we are in a weekly uptrend. And so this weekly uptrend started in November, and we've continued to hold above it. Even in that most recent 15% crash, we closed above it. We found support on some horizontal confluence levels. The lowest one was 41,600. We're now sitting above support at 42,600. So that is currently our lowest level of horizontal confluence, 42,600. Next, we've got 43,300 and then 44,300. Naturally, that will be a pretty big one, being our main level of support when main level of resistance, when we were trying to break to that 46K level. So a couple of levels of horizontal support there. That should help the price stay above and within this trend line. And if we pop into a 1 hour chart, we can see that we have broken an RSI trend line, our downtrend. So this downtrend here, we've finally broken that. And we're seeing some positive momentum come into the market. Ideally, it'd be good if we could see a new RSI uptrend develop. That would be good to see. The volume is also, why did I move that line? Volume is also kind of bearish. Volume is kind of weakening. We are seeing those green circles print, which is a good sign, and it looks like we might be seeing a volume flip soon. And also market cipher A, those moving average trend lines are converging, suggesting that we are likely to see a trend flip. So this downtrend should be exhausted, and we should likely find support as we are on this level and continue upwards. I would say at least to test this $44,300 level for now, and we're going to continue on that uptrend and see where we go from there. So I think temporarily this downtrend has exhausted, and I do think we are going to see a little bit of upwards movement. However, on a macro scale, I do think that we're actually due for a major correction down to $40,000. You heard that correctly, guys. So I don't think we're going to continue upwards past 48K just yet. I do think before we see that, we're going to test $40,000, this $40,000 level of macro support before we see any other continuations upwards. So the reason why I think this is, if we look on a daily chart, look how exhausted we're looking, right? So since October, we've been seeing, that massive amount of accumulation. That's kind of unprecedented for an accumulation phase in Bitcoin. We have our regular macro uptrend, and then we had this really, really steep one, and that was right around the time that ETF news was starting to get really big. Hype was getting really, really crazy, I guess. And that's when people started accumulating in preparation for the ETF approval, because it was like 90% like certainty that it was going to be approved, right? And then we also had the institutional buying as well. All the people that applied for the ETF would have to accumulate their asset before they obviously made the ETF available, right? So we had all of that buying, we had all that accumulation here. But what we also see is a massive downtrend in our RSI. Since that October period, we've been increasing in the price. We've had an uptrend in the price structure, but we've had a downtrend in our momentum. And sure, we've broken through, this $36,000 level with a bearish divergence. We broke through 40, we broke through, we even tapped 48. But so why can't we break through 48 with this downtrending momentum? The main reason why is because $48,000 is such a huge level of resistance, and I simply do not see us breaking it from such a weak stance, right? Even our volume, for example, we had an upwards peak to push us above this 36K level, and an even bigger upwards peak to push us above that 40K level. But since touching $48,000, we've just been decreasing since then. Like, look at this peak. It literally looks pathetic. We don't have enough volume coming in. Even our bearish divergence looks stronger than it was, at the last point of resistance. This downtrend is even stronger than it was, right? So all of that is kind of telling me that on a macro scale, we're not going to continue upwards just yet. And I can explain why $48,000 is such a huge deal on a weekly chart. Here we've got $48,000. This is that red line here. And our next levels of resistance is $52,000. The reason why these two are kind of different, even though they're both levels of resistance, is because $52,000 actually represents a gap in the VRPV, whereas $48,000 is actually a peak. So at $48,000, we've got a lot of volume, a lot of selling pressure, a lot of buying pressure, but the main reason why it can't push above is because of that selling pressure, right? And once we crack above that 48K level and we actually have a close above it on a weekly or a daily chart, what we can expect is a pretty rapid and steady move to fill this gap at $52,000. And once we fill this gap, we start to see the volume kind of pick up again until we have our next peak at around $58,000 to $60,000. From there, however, it's just slowly decreasing volume and selling pressure and historical price action. So what that means is after $48,000, we have little to no resistance between there and our all-time high. So it's the main barrier between where we are right now, which is this kind of like steady accumulation between different trigger points at those resistances and supports, to an actual bull run. From another historical price perspective, we can also see that 48K represents a really important level called the dead cat bounce level, and you can see it in all other 4-year cycles. So I've already talked about this in other videos on my channel, so I'm going to try and keep it like really short for the people who are new or maybe missed it. 48K, that dead cat bounce level is this, I guess, temporary bounce in the middle of a bear market that happens right after the all-time high. So I kind of really struggle to explain it, but essentially, so all-time high, we have a downwards move, and that's the start of our bear market, right? And then we have this temporary relief, and that's a little bounce, and that's the dead cat bounce. And so this level generally provides a really strong level of resistance. So what we see historically is that we reach this level, we reject from this level, and then a continuation upwards past it is what leads us to our next bull run and our next all-time high. Again, you can see it here. We have an all-time high, have our bear market starting a dead cat bounce, and then after we reject from our dead cat bounce and then continue upwards, then we have an all-time high. So here, our all-time high is at that $69,000 level, and we have our dead cat bounce level at $48,000. So now that we've touched that level, what I'm expecting is that we get a close. That $48,000 looks like we've always closed at that level or slightly above that level before we reject downwards, and then after that rejection, we should continue upwards past 48K and to our next all-time high, right? What this chart also tells me about where we might correct to is that we haven't historically closed above the closed below the Gaussian channel in our correction. So here we are completely above the Gaussian channel, and here we wick into it, but we still maintain a monthly close above it. So what I can expect here is that we would most likely reject. It might not reach this level. I'm just saying worst case scenario, we might reject to $36,000, right? So that's that level of support right below $40,000 as well. So that coincides perfectly. We might get a little bit of a wick into it. To where, I'm not really sure, and whether or not that's even going to happen, I'm also not sure. But worst case scenario, we will touch $36,000, bounce on that $36,000, and then continue to $69,000 and beyond.
There you have it, guys. That's everything that happened with Bitcoin this week, as well as my macro predictions moving forward. Hopefully it wasn't all doom and gloom. We will see a little bit of relief from our current downtrend and maybe even close at 48K before we continue in our major correction downwards. If you guys enjoyed the video or you learned something, feel free to like and subscribe down below. If you like my content or you'd like to see more, follow along on my free Telegram, where I post daily market updates, economic and crypto news. As always, I'll pop in the links for Bitget and BingX, where I do all my trading. If you guys want 15% off your trading fees, feel free to sign up down below. Other than that, I'll see you guys next time. Bye!